The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome, everybody, to another excellent edition of the Power Trading Hour with me, your humble, lovable, squeezably soft koala bear of Wall Street. Just one little tiny teddy bear eating my eucalyptus leaves. So, we're back after a weekend, and what did we have? I kind of pushed down, and it all started with the Dubai stock market being down about 6%, not 6.6% yesterday, and it pretty much went on to the DAX. The president spoke, and slightly after that, everybody decided that nothing's going to happen, so we might as well just get back into that buy mode because we're Pavlov's dog in this market. The bell rings, and we're in the buy mode. We can only buy. There's no waiting for more than one or two S&P points before we have to go back and buy. And then, of course, once we get up to this level, not so much. We would like to buy the dips, but we're not buying any of those silly breakouts. But we are watching the market here, and as every start of the show, we'd like to check in with what kind of volume we have. Right now, extremely light volume, 1.6 billion shares off 3 points on the S&P cash. We were off as many as 12 points. This is options rollover, and I think part of what we're having today is a little bit of options activity. That's going to be over about 2 o'clock tomorrow afternoon. And then we have a fairly full week of earnings. Next week, we've got an FOMC meeting. And it's just hurry up and wait is pretty much the battle cry of just about everything that we're seeing out here. But I digress. So we're going to get right into it today. Of course, on this day in 2010, Dodd-Frank was signed into federal law. And, oh boy, has there been a bigger boondoggle than this? Yes, there has, but I'll stay out of it. Only one. But it is, at least recently, it is about half implemented after 4 years, and no one really knows what to do with it. And there wasn't a lot of guidance because, of course, Congress didn't want to have their sticky little fingers in there getting blamed for all the stuff that was happening. So what they decide, well, we'll just let somebody else settle it. But what they did was, of course, give a bunch of grandiose targets and ideas that almost can't be put into a law. Someone would have to really look at it. And of course, this is another one that we just had to get through at all possible regions because it was more important to get it out there than get it right. The two people that sponsored this bill, Dodd and Frank, Dodd probably pretty sharp. I think he knew he was doing evil. Frank probably thought he was doing good, and of course it was evil. And there's a great deal to be said for the end of every financial blow-up. They changed laws, and we covered that last week. But at the very end of every bubble, Congress passes new worthless laws, and of course, since they're 10 times smarter than the congressmen, the people on Wall Street just find ways to get around it. They've usually or mostly made Dodd-Frank a way of keeping small banks out and certainly much smaller hedge funds, which we probably could use more small hedge funds than large ones. If one blew up, it wouldn't take out the entire East Coast. But what we have now is a place where only really big hedge funds, 200-300 million, can even afford to stay in there because of all these new filings, and the filings really don't do any good at all. All they do is incur a lot of work and keep a lot of people out. And maybe that was what they was designed for to begin with. Maybe I'm just not looking at this enough as a jaded bear. But it's not looking all that exciting, at least in my view out here. But we will continue on. Other things that are going on, of course, are going to be earnings. And for the most part, I think we're waiting for Apple tomorrow. Apple and Microsoft, VMware, and Xilinx also. On Wednesday, Delta Airlines, EMC. EMC had some big news today. FFIV, Flowserve, FLS, FCX, Qualcomm, and Tractor Supply on Wednesday. Thursday, we've got 3M, Altera, Baidu, Caterpillar, Deckers, Dunkin' Donuts, Ford, General Motors, HomeAway, Clack, and it's Starbucks and Visa. On Friday, we've got Silicon Laboratories and Tyco. So a full week of earnings that could move the market, but nothing so big as what we were going to see tomorrow after the bell. My guess is that Microsoft is priced for perfection, probably stay where it's at or go down a little bit. Of course, I thought that about Intel. But I don't know if they just caught some people unawares, but it seemed to me Intel was fairly valued up at that high here. I mean, can't hardly get any better. Apple probably a little bit more of a issue on what they have to say on when the iPhone 6s were actually going to ship and what they are looking for in the watch marketplace. I have said in my Tech Insider that Apple has decided that I think that they've gotten to market saturation, and what they're going to do is start selling accessories, and they are going to be the Kirby vacuum cleaner salesman for smart devices. The first is going to be a watch, and of course they're going to soon have those headphones from Beats and a streaming music service, and they're going to have anything that can hang on you, minus gold chains. I think that's already, the wrappers probably already got that handled, and the gold suppliers. But it is going to be a big week out there. One more, Herbalife. Hedge fund manager Bill Ackman was out at lunch today giving and saying he will give the most important presentation of his career tomorrow when he unveils an investigation into Herbalife's nutrition clubs. He says it is a fraud, and that will be starting at 10 a.m. this morning. And I saw a quick quote on it, but I didn't see the rest of it. Here, let me take a quick look, see how much it is down. HLF. $4, almost 7%. And that, if I look correctly, take a quick look here. Where's my 1 day? Yep, happened right at 12:30 when he went on CNBC. So a pretty big move today. But he says that he's got the goods on him, and he's going to fry them. So that's kind of interesting, at least. And I wanted to take another quick look. I didn't have time to prepare a lot of slides, but I wanted to take a look at the Russian stocks. Where are those, you little Russian guys out here? Also getting hammered yet again today. And I forgot what it was, but it was fairly extensive, the amount of damage in the last 6 weeks on these stocks. But QIWI. Take a quick look at that one. QIWI. And yeah, let me put that up here. That looks pretty bad. They had a nice bounce when caught a lot of shorts on the wrong side of this. It's coming back into that support level now. That was the 21st of May, 2.2 million shares, and volume's not all that big today. So maybe these things are getting ready to bottom out. Another one is Yandex, YNDX. this one's done about a 50% retracement, maybe not that much. Let's take a quick look at the retracement out here. Yeah, 28.80 would be a 50% retracement. So maybe another 90 cents down. I take a look at it out here, but certainly, yeah, this one's got a little bit more energy. And let's see what else we have. ERUS for the other one. And yeah, this one's probably fairly much back into its support level. If you're looking at confluence on this, which it does have, it's kind of wide and meaty. Not what I particularly like to put a trade on. But what you can say about these areas when they're this big and wide on an $18 stock is that they tend to act like at least some minor support, but more a congestion zone that it has to work through before it can go any lower. So that's what happened. Oh, I was typing on one side and doing something else on the other. MBT on my list of stuff out here. Mobile Telesystems, another one out here. When you look at that 50% retracement, it would be 1755, got to 1786 already today. A little bounce off the lows, but getting awful close to probably some support levels on some of these off the lows where Russian stocks have just been hammered. And probably a bigger issue for Mr. Putin is the huge amounts of money coming out of their stock market, because no one really wants to be there. Now, if you want to look at probably the biggest indicator, it has done a 50%, and that is the market vectors Russian ETF, RSX. As we look at that, $24.54 would have been the 50%, where we went below a dime on that. And that's probably, I have a feeling that no one believes that we're going to do too much more about all the issues in the Ukraine. We're more than willing to sit back here and watch it at least go along for a while. But anyway, 254 was 50%. We've come back on that. And when you look at the volume on at least the ETF, which is played a lot, volume pretty tepid for today. And you're back into a gap. That gap didn't have all that huge a volume, but still pretty good. 8.7 million shares back on the 19th of May. So 6 million shares today. Not a bad bet that we're getting into some consolidation zones, at least in these Russian stocks. We will be back in a minute. See you then.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
As we come back, you can always email me at path@tfnn.com. That's PATH at tfnn.com, and we'll be glad to take a look at your stock, or you can post a message in the den, as somebody has done. We're going to look at their chart here in just a minute. And, of course, you can give me a call at 877-927-6648. Anyway, the question was about Google and its earnings per share estimate and growth into 2015. They certainly have figured out mobile search and maps. Is it a huge growth story out here? I don't know if there is. Maybe there's some new stuff coming out that I don't know about. But for the most part, just incremental builds on what they've made, and they figure out every day they're working to figure out how to make more money out of the data that they have and sell it. Eventually you probably get to the end of the road on it. When you look at the chart, the energy on this last leg fairly light up here. Hard to actually say anything else. A lot of visibility in this company and figuring out how much money they make and how they make it in search. So very rarely do you get a big surprise in Google. But to me, just look for the same kind of plodding growth that they've had over the last 2 years. I don't see a great deal changing out here. And with all the yelling and screaming for Facebook and Twitter and the rest of the stuff, these guys just make search work for them every single day and find new ways to monetize it. So what else can you say? I think that they're probably just going to go along with the same trajectory unless something happens major to the market. Just not too much to say out there. A lot more going on in other companies, and probably why we're looking at them. Other companies of interest, EMC, one of the big men in the street. The Elledge Management Company has $1 billion in the AMC stock, and they are going after the company as an activist investor to get this to be broken up, and hopefully getting more than the sum of its parts by breaking it up. Yeah, I think I don't know how much of this is real, how much of it is imagined. Certainly the guy has $1 billion. That's easy enough to figure out. Whether or not they can actually break up and make and get more money for the company, also kind of weird. What do we have? VMware also down a little bit on this news. There would be some requirement, or either EMC owns some stock. I'd have to dig into it to find it totally, but for not moving much, this is kind of go a little bit lower today. Of course, coming out with earnings fairly soon, so we'll know that. Of stocks of interest, of course, a lot of earnings coming out. I didn't think this would move the market much, but BBT, the big banking conglomerate, down on heavy volume. Looks like it can blow away its previous two lows from February 4th and May 15th, both in the 36, let's call them the low $36 ranges, at about 4.3 million shares. We already have 6 million shares today, so looks like it could easily bust the $36 range. If it, it's already got into those candles with a volume, so you have to look lower. And a break here could take you as low as into the high 32s for BBT. Let's take a quick look at the XLF. In the XLF, a little higher today, no big deal. So can't take a look at that. Monster Energy, kind of a big move for what happened. MNST. Monster Energy down on a downgrade, basically going from a buy to a hold at Morgan Stanley. But high volume high down here at $63 from May 9th with 3.3 million shares. Looks to me like you'd probably want to take a look at that there as what kind of volume actually comes in. But certainly fairly decently into that candle. Another one that actually is truly moving today. Over the weekend, you had a Barron's article about Juniper, JNPR. And had a little bounce out of that one. Not a bad looking chart out here. Did test the previous low 2 days ago on about 20% lighter volume. Maybe they're just giving it a little help with the upgrade today. Anyway, we'll be back in a minute. Give me a call, 877-927-6648, or email me at path@tfnn.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And as we're back, had a somebody in the den, but I don't know what ZB is supposed to be, or /CB, or Z8. I don't know. Maybe they didn't type it right, but maybe Jerry in Boston can resend it with an explanation of what he's looking at. Anyway, what else do we have going on out here? Still, what do we have? We had BBT, DVA. Take a quick look at that. DaVita. Downgraded to market perform from outperform at Raymond James. So a lot of these stocks a little touchy, especially when we were going down. You'd think that if it was just a one-day deal that you could see, like the market, this kind of coming back a bit. But down, heavy volume. You got a nice big gap with some decent volume back here. On the 12th of February, that gap, 4.4 million shares. So in the scheme of things, 2.2 so far in this trading day, not the big deal. But certainly looks like you have a good chance that this will eventually come back and touch that 66, mid $65 level for them. Okay. What's going on with HLF? Covered that at the very beginning of the show. Tomorrow at 10 a.m., Ackman is going to give yet another presentation where he says he has the good that it's a fraud. So we shall see. The proof is in the pudding, as we should say, but he came on CNBC and handled it, or talked about being there tomorrow. Oh, okay. 30-year bond. Okay. Okay. We should go there from here. Okay. Anyway, what else do we have? Oh, I wanted to look and see what else we have. PT, it's up 6%. CPSO, mid cap 6 left. CLF. Cliff Natural Resources. Company mailed an open letter to shareholders regarding an ongoing proxy fight with Casablanca Capital. And I guess they didn't like that. Of course, this thing is making multiple ABC downs. The next one would probably be to, what is that, about a $6, $7 one? Well, I'd take it down under $5, $6, something like that. But certainly down. Volume hadn't really picked up, so probably a good chance that this is going to be enough juice in this one to at least come back and try to check out these June 13th lows at $13.60 in Cliff Natural and see if there's anything else. That's pretty much at the moment for winners and losers. Is GE breaking down? It certainly doesn't look good, does it? Heavy volume on General Electric, the General. And, of course, the previous big low out here had 37 million shares in it. We've got 44 million shares already. I just think this is in a big trading range from about $24 to $27, and that's kind of gotten out of the way. And it comes down with heavy volume and then tends to move and gap up with some volume. But to me, low 24s, back up to the mid 27s is probably just about everything you're looking for. Of course, this week we've got Ford and General Motors earnings coming out. Ford's hugging this previous high. Got into it the other day with light volume compared to the October 24th high at 1802 with 71 million shares. Got into it with 47 million shares. But, of course, with earnings coming out this week, everything priced for perfection, probably going to hang out here a few more days. But when you look at it, this thing is set up for a major break or failure. I don't know, it seems to be probably about as good as you could. Of course, Ford was talking a lot about a lot of growth coming from China, and Chinese basically saying they're going to electrical cars because no one can breathe over there without a gas mask. But we will find out. And let's take a quick look at the markets here while I'm checking in and seeing we're off 4.5 points on the S&P cash, 1.7 billion shares. So back up again, not finding a lot of late afternoon volume here today. And like I said, I think I have a feeling for a great deal. We are looking at everybody waiting for Apple. Let's take a quick look at Apple. I haven't done that for a little while. This thing looks like it's going to try to go back and hit a previous high. Let's go back here a little bit. $100.72 split adjusted is that 700 and just a little over $700 high pre-split. And volume, you're going to need 140 million shares. And kind of tough to get it. Of course, this last run up has been kind of on light volume. And again, it's probably going to be what this stock does is probably going to be a lot more about what they say they're going to do in the fall than any kind of earnings right now. Probably the most interesting thing would be how their sales are doing against Samsung over the last 60 days. We've listened to Samsung tell everybody just how saturated this market is for the high end or the most expensive smartphones. Apple acts like nothing's changed at all. Everybody just wants an Apple. But they're so far and so full of PR maybe we could just say full of PR. I think it goes without saying that it is going to be tough. And of course, they could have that, and then they could say, "Oh, we're going to sell 10 billion iPhone i6s," and everybody would feverishly drool at the feet of Apple once again, because it's basically one of these stocks that, at this point, can do no wrong except disappointed earnings. And the question is whether that market high end is saturated, and if the only way that they're going to go higher is start selling accessories like watches and headphones and all the other stuff that those guys could sell. No, I watches are out maybe before the end of the year. It's been kind of tough. The only thing that we do know is the iPhone 6s are supposed to have gone into production this week, but problems with production out there have made it somewhat difficult. They take a wild guess. We used to, in engineering and software development, used to call it a WAG. You can guess what the A stands for. And, they get spreadsheets and they put everything together. So if they ever get sued, they can claim it. But for the most part, it's always a wild guess. And they'll massage the books to make it look close to their guess. And what can you say? Look at a few stocks out here and see how they are behaving. Not many super cheap drugs out here, but this one kind of caught my eye just for light volume. I would have liked to have seen the energy really die off back here at the highs, and it hasn't yet. But it's another one I want to keep my eye on. This thing has gone below the previous June 13th low at $1.63. This is a ZGNX. But energy was pretty much the same up and down, which says that this thing could go sideways for a while, but probably not much lower. Did go to 156 compared to the $1.63 it saw on June 13th. A little bit of a pop back up here, no volume. What you would like to see is maybe this thing go sideways for 5 or 10 days and then maybe take a look. Some of these other stocks, especially resources stock, we looked at Cliff Naturals. Another one up here with fairly light volume is QEP Resources. Symbol is QEP. When we look at this high from the October 22nd of last year, $34.24, 7.2 million shares, pretty much have gotten into it with lighter volume. 2 million shares a couple of days ago, trading days ago anyway, and very light volume again. This thing's had some big gaps in it, but we'll figure out on that. Another bio stock out here that's come close to testing its lows, but certainly this thing got blown apart with heavy volume back in November 6th and 7th of last year. 4.8 million shares, 4.5 million shares for those days in November. Was that November 6th and 7th? Thing came down on monstrous volume. That's been acting as support for this Nodiva Biopharmaceuticals NAVB, and it could be interesting. I do like the way that the energy has been nice and light since the high on June 13th. And if I wasn't so bearish here, I'd be taking a look at that one fairly quickly. Another pharmaceutical out there is Accordia Therapeutics, ACOR. This one's made some nice light volume compared to the previous low. There's probably better ones out here, but at least it's down here. Got a little bounce out of it, but not much volume today. Don't like the way that the energy picked up on the second leg down from June 9th to July 17th. Energy has been picking up, even if we didn't get enough volume to break out that low this time. Maybe you get a bounce out of it. The next time it does get it. Wanted to look at a few look at some of these stocks from last week. we were looking at Clear Harbors last week, saying that a few of these stocks had at least the opportunity to maybe bounce a little bit. I liked Clean Harbors testing its last gap that happened on April 25th with 2.2 million shares. Last 4 days, 418,000, 422,000, 288,000, 270,000 today. So not a bad-looking stock out here. Coming back into support. It's had a light volume. I don't know if there's anything really pushing that, but interesting. Another stock that's been blown apart, kind of like Herbalife, with bad news, all about kind of a, I guess the F word, fraud, has been bandied about. This thing's gone sideways for an incredibly long time and has now busted below the previous lows. You wanted less than 12 million shares from the March 12th low at 68.02. And, of course, we blew through that and, yeah, had a lot of volume, 3.6 million shares. But I don't know, maybe it just doesn't matter on this particular one. The roach theory, where everybody expects that if you see one roach, there are more. Talk about coming back into support. Natural gas, looking pretty good out here. Let's see if I've got a quote on actual natural gas. Do I have it here? No, I do not. UNG, though, again off today. Maybe someone's got it in the den for me. But it is a interesting move back into this gap. Let's take a look just a little bit more at UNG. We've talked about the seasonal charts and how natural gas, you kind of want to be looking somewhere around the 15th of July into August, more like August, first week of August, to buy natural gas. Just so much and so many opportunities for natural gas to replenish most of what they have out there. And I have a feeling that we've got not a bad looking chart out here if you want to go long. We just are probably waiting for the whites of their eyes. But $20.50, I think that would probably be a pretty good area. And, of course, natural gas, like a lot of these things, likes to overshoot. And if you could get into that, maybe even fill this total gap down to about $19.70 in natural gas, at least in the UNG, from the 13th of January, would probably be a pretty interesting place to take a stand. So I'll be watching that. Nothing in that one, nothing in that one. Let's take a look at it. Another one out here we've been talking about testing its gap is United Natural Foods. We'll be back and look at this when we come back, but pretty good. And we're going to go to Larry from Farmington Hills, Michigan, and look at ATTU when we come back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And that's right. If you heard that promo, Tom O'Brien starts at 3 today instead of the usual 4 o'clock Eastern time. And we're going to have a great, a little bit of a shake-up if you didn't catch us announcing it on Friday. But we are programming from 8 in the morning to 6 at night now. And Andy, instead of stalking me on Tuesdays and Thursdays, will be stalking Tom on Tuesdays and Thursdays. And Tom will be doing the 3 to 5 o'clock hour. So, what can you say? It is going to be enter. Anyway, we had a question from the email about Attunity. Let's see, what do we have here? What's that? Subsidiaries develops markets and sells information availability software worldwide. It offers Maestro, an enterprise-class information flow management and automation platform. Don't know a whole lot about these guys. Certainly, I see what he's looking at out here, and that is that low-volume test of the November 21st low of last year, $7.25, 1.2 million shares, and you came into it with 64,000 shares. Volume is light. That's everything you want except volume on the upside. Normally, I'd give these 3 days to come into some kind of volume, but a good-looking chart out here, and we'll have to keep an idea. Okay. See if there's anything else out in this one that makes me think anything else. That's it. Just crossing the wires a little while ago. How much time we have back? I got to reach and grab one of the computers that's out of my range. There we go. Don't you hate those annoying pop-ups? Anyway, probably the most interesting news, other than, of course, seeing that Qatar, what is it? Not Qatar. I'm having a mental blank here now. Dubai got absolutely throttled last night. But one of the more interesting things I've seen out over the weekend is why the IPO from Alibaba looks like it's going to be held up. And it looks like there's going to be some big payoffs to Chinese leaders. And the SEC didn't quite like the whole payoff plan, and basically extortion from Chinese leaders. They all wanted to wet their beaks. So I kind of thought that was interesting. Didn't really think that there wasn't enough time. If you caught my show on Friday, I thought there would be plenty of time for them to address the problems of the SEC. But it looks to me like the problems of the SEC is they have to sign off on this shakedown, and that may be a lot of problems. But it says it could be a bonanza for the scions of Chinese leaders. Yeah, I'm going to call that a shakedown. So it is going to be another deal. Yeah. But I like this chart. I'll keep an eye on it. Super light volume test, which is exactly what you want. So I'd put a stop in and I'd hold on to this thing. Looks very interesting. Very interesting indeed. Colonel Hogan. We'll see you tomorrow. Same bat channel, same bat time. Channel 14 on Tiger TV.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.